Have you ever bought a stock or cryptocurrency and the moment you buy, the price drops? Or the moment you sell, the price goes up? The answer is quite simple. You might not understand price action yet. Keyword is yet. Some successful traders and investors do not trade with any indicators on their chart. They simply understand price action. I did not invent this strategy I'm going to be discussing in this video. It is also known as the Wyckoff's method, and I think anyone trying to get involved in the market needs to understand this concept. This is my first video, so if you're watching this, welcome and thank you. Please like and subscribe so you do not miss my videos. I'll go ahead now to discuss the 4 market stages. The first stage is the accumulation stage, followed by an uptrend, then the distribution stage, and finally the downtrend stage. Next, I'll be explaining the accumulation stage and what you should look out for. So what is the accumulation stage? In financial markets, the insiders, also known as institutions or smart money, begin to buy shares at lower prices after a downtrend. The key word is after a downtrend. The goal is to make sure they have enough stock to meet demand. They're trying to buy as much shares as possible within a desired range. So how do you identify the accumulation stage? So like I said, it happens after a downtrend. And a downtrend is identified when price continues to make lower highs and lower lows. Lower highs and lower lows. But finally, it would eventually find a bottom. That bottom is called support. And price will start to trade within the range the insiders want. The upper limit of that range is known as resistance. Think of you're trying to get above something, you're trying to get through something, but you just keep hitting resistance. After this stage is complete, the market will move to the uptrend phase when the insiders are ready to take the prices higher. So this accumulation phase can last a long time. So most buyers are not patient enough to wait for the market to turn around and begin the next stage I'm going to discuss, which is the uptrend. So I hope now you're starting to realize, oh, when I was selling, I should have probably held my investment if I did my research and you're confident that your research proved that this is a quality stock or crypto to buy. So following the accumulation stage, we have the uptrend phase. At this point, the insiders are ready to take prices higher. This stage is associated with positive news in the market, positive economic growth, positive earnings, and demand exceeds supply, so price will continue to move higher. So what does this look like? Like I said, in the accumulation stage, price finds the floor after a downtrend and is trading within a range of support and resistance. Right? So at the beginning of an uptrend, you're going to see price actually break out of resistance. Boom. And continue to make higher highs and higher lows. So that's what you want to look for when the market is in an uptrend. So high highs and higher lows after breaking out of an accumulation phase. The longer it spends in the accumulation phase, the stronger the move to the upside. So after this uptrend phase, the market would then move to the next phase, which traps a lot of retail traders and investors like myself, because we love when the stock is in an uptrend, right? And sometimes you just rush in there to buy when it's already in an uptrend and price is starting to peak. So I'm going to show you the distribution phase next. So after the uptrend stage is the distribution stage. This is the exact opposite of the accumulation stage. You don't want to buy at these levels. The insiders are ready to sell at the highest price possible. So they'll continue to gradually take the price up until they're ready to drop the ball. Retail investors will continue to buy at this point because they feel fear of missing out. Fear. Oh, I'm going to miss out on this big trade. It's going to move higher. It's been moving higher for the past 3 weeks. Let me buy now. Don't do that. So what does this look like? After an uptrend when the stock is moving and making higher highs and higher lows, it gets to a peak. And that peak is like your resistance level. It's no longer making any highs. You just see that price is starting to move within a range of support and resistance. Right? So at this level, the market is back at equilibrium, and you should be careful buying at these levels because you could end up in a losing position for a long time. So after this distribution phase comes the downtrend stage. So following a distribution stage comes the downtrend. This is the exact opposite of the uptrend. This stage is associated with negative news in the market. Economic data is negative and earnings are lower than expected. At this point, the supply in the market will exceed demand and price will start to fall. What does this look like? So remember I said in the uptrend, the market is making higher highs and higher lows, and then it picks and starts to trade within a range of support and resistance, right? So this downtrend phase starts when price breaks this support level that the market has been holding for so long, and then it starts to make lower highs and lower lows, and all the retail traders and investors will just continue to sell because they're afraid of losing their investment. Eventually, everything comes full circle and price finds a support or a floor, and it starts to trade within a range again, and price starts to trade within this range for the next trip back up. So the point here is you should not be buying in the distribution stage. You should buy low and sell high. Avoid buying when you should be selling. So there's a common saying, buy when others are fearful, meaning buy in the accumulation phase. This is when most investors and traders are afraid. The ones that don't understand this concept, they want to sell. That's when you should hold onto your high conviction plays that you researched and you think are going to work out. So I'm going to show you some real examples in my charting platform, TradingView. This is my charting software, TradingView. When reviewing charts, it is always best to start from the higher time frames and work your way down to the smaller time frames. The higher time frames give you the big picture perspective. So if you're investing, you want to start from the monthly or the yearly, monthly, weekly, then down to the daily time frame. And if you're day trading, you want to start from the daily time frame, work your way down to the 4-hour, 1 minute, 30-minute chart, even down to the one minute chart. Some people do that to trade and find entries. So the first chart I'm going to be looking at today is LCID, Lucid Group. So as you can see here, LCID was in an accumulation stage from September 2020 till January 2021. Right here. And then rumors started circulating about the company getting listed via a SPAC. A SPAC is a special purpose acquisition company. This rumor resulted in a breakout of the accumulation stage, and then the stocks started to trade and form new highs. This next phase was the uptrend, right? So after the accumulation uptrend, eventually it stopped making new highs and started a very brief distribution stage. Then news confirming that rumor, remember the rumor that started the uptrend, dropped. And of course the price also dropped. And a lot of people were left holding the bag because they thought this stock was just going to continue to go higher and higher. And most people know that in the market, it's a buy the rumor, sell the news scenario. So a 13-point drop overnight, and this stock continued to make lower lows and lower highs. Eventually, what happens next? It starts an accumulation phase again, right? A nice accumulation phase. But then After an accumulation phase, because it's not always going to, it could accumulate for 10 years, remember, like it could stay there for years to come. It needs a catalyst to send it back to the uptrend. So the market's there loving EVs again and SPAC related companies. And it broke out of this accumulation stage and resumed an uptrend. So on my Instagram page, I mentioned how to identify a strong trend. So link in the description to view that post, and it goes over like just little key things to look at. I also talk about them here. So in an uptrend, you could just draw a trend line. And once you draw a trend line, you want to make sure that price doesn't drop and close below that trend line. If not, the trend is broken, right? So now that you have this nice uptrend on LCID, you can now, if you're day traders, not investors, please, you would go down to lower time frames such as the 4 hour or 1 hour and try to see what's happening on the lower time frames because you're day trading, right? You want to see what's happening on the on the lower time scale after looking at the big picture. So as you can see on the 4 hour as well, it's still respecting the trend line I drew on the daily time frame. So how would you trade this stock? So fine, you've seen that it broke out of the accumulation stage here and it makes a high. You're like, okay, great. Where would this stock bounce next? It pulls back. It has some red days, right? It's not just going to go straight up. And you want to buy when it touches or comes close to this trend line. Support levels. Like I said, buy at support, sell at resistance. Buy at support, sell at resistance. There you go. And if you're holding this like for 2 months, you're swing trading, you might just want to ride the trend because that's what swing traders do. They hold their positions for a day or a couple of months and ride the trend all the way through until the trend is broken. Then they sell their positions. That's what swing traders do. So as you can see, you have 4 buying opportunities here. 1, 2, 3, 4. So don't make the mistake of chasing and buying at the top or selling when you should be buying. I hope this helps. Like this is a low level basic explanation of when to buy and when to sell and how to identify the different phases and stages in the market. I would be reviewing the next stock, PLTR, Palantir. I'm going to be looking at is PLTR, Palantir Technologies. So as you can see here, it's in a accumulation stage. And then it breaks out and starts an uptrend. Please don't make the mistake of just shorting the market right away once you see price trading within a range after an uptrend. No. Remember, it needs to break down out of that range that it's trading in. Did it break down? It did not break down out of that range, right? It never broke down. Instead, it broke up and continued the uptrend for a short time. And then eventually, it started this mini distribution phase. They're really close, relatively close. So, and then it broke down out of that range and then resumed a downtrend. And after it found the bottom in about May 2021, it continued to trade within this range. So PLTR has not seen that high of $45 since February. Now, I think this stock is in an accumulation stage. So people think, oh, it's going to zero, but I do think that it's accumulating until it breaks this low of 16. I think it's just gonna keep trading within this range and eventually explode. It's doing nothing now. So people are like, no, it's not going anywhere, but it will. I think they're just accumulating a lot of stage because if you do your research, this stock has a lot of potential long term. So, crypto lovers, the next one I'm going to be reviewing is Ethereum. Let's go to the crypto chart. So, you can also see this on, I'm just trying to show that you can see this happen on any chart. You can open your favorite stock and just try to find the stages. And I promise you, make things better for you as a trader or investor. You know when to buy and you know when to sell. So Ethereum was in hindsight, right? Like it was accumulating for years since 29, like since it first dropped. Yeah, going way back, right? It was accumulating. You can say, looking at it right now, it was just getting warmed up for the run. And then it started this nice uptrend, as you can see. Uptrend. Staircase. Till it made a high. I don't think, okay, let me make this bigger so you can see. Okay. So after this nice uptrend, staircase, you just want to see gradual higher highs, higher lows, all the way up. Just grinding. Right? I remember what I said. You want to buy at the touch of the trend lines. You show the trend line. Set an alert. Okay, when the price touches this trend line, I'm gonna buy. See what happens when it touches this trend line. It bounces. It bounces. When it comes close again, it bounces. So that's where you want to buy if you're trading with the trend, right? So as you can see, this nice channel uptrend that it's forming continues to go, right? And then it makes a high back in May, starts a brief distribution phase for a couple days, and then the crypto market just tanked. And if people are like, oh, crypto is done, it's done. No, they started to accumulate it because it was news that definitely brought this coin down, right? And they started to accumulate shares around this range. I'll show you right here. Stop making lows, and they started to accumulate. They were like, yeah, we're gonna buy within this range. No lower, nothing lower. See, it came down to this low of 1734 area, and then that's where okay, it's not going lower. Some people noticed that early on, and they were like, okay, the next time it comes back down there, I'm gonna buy again. And the next time it comes back down there, I'm gonna buy again. And that's what some people did. And then it started to take off again. So this cycle happens all the time in different markets. Happens in the forex market, it happens in the crypto market, it happens in the stock market. You just have to be able to look at the big picture on the daily time frame, or weekly, or even monthly if you're investing, and see where the market is trying to go next, and trade accordingly. So now, some people think this might be another distribution phase in Ethereum before the next downtrend and then accumulation. But who knows? Let's watch and see. It hasn't really broken down yet, so we'll see. So once you understand this concept of how price moves, you can use candlestick patterns, trend lines, support and resistance levels to manage your trade or investment. If you have any questions, please message me, comment on this video, and let me know, and I'll be happy to help. I notice a lot of beginners struggle with this. They end up buying where they should be selling, or selling where they should be buying. That shouldn't be a problem going forward. I hope that this video helped. Please reach out to me if you have any questions. So to recap, we talked about the 4 stages of the market. The accumulation phase occurs when price is within a range after a downtrend. An uptrend is associated with higher highs and higher lows, and the distribution stage occurs when price is within a range after an uptrend. And finally, a downtrend is associated with lower highs and lower lows. Hope you all learned something today. Thank you for watching this video. Please like and subscribe, and feel free to leave a comment as well. Until my next video, take care and stay safe.